All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast. Close out the year. Holy mackerel. December 30th, 2022. We'll start with the sniper trade of the day. So we're working with Alcoa on 3 minutes. Here was yesterday's close. Here was the gap down. This is the OR3. Opening range 3 minutes. It opened where it closed, started taking back off, so we buy it in the usual way. Standard risk box here. If this gets up and gets into the dragon here, right around this region, that's the tactical space. And all we got to do in that space is just get our risk out in order to lock in that little wedge of goodness. If it gets above the previous PSAR, then it becomes interesting. And we will have gotten our risk out and then can be along for the science project. So here we go. It almost got there. It got up about this far and then started collapsing. And so I just took the scratch exit. Didn't like the looks of that. I should have been on the... I was actually surprised by this one. Was not prepared for stop and reverse twice. That could have very easily have been stop and reverse with a... I don't know why I didn't see that this morning with a standard risk box. And boy, that would have paid, especially when it breaks to a new daily low. So that's one that got away. When I realized that that I'd missed that one, I was not mentally prepared to take that one short. The good news is that it reversed and started coming back up. So we're just we're at break even so far for the day. It gave me a 1, 2, 3 re-entry, and this felt... I was back in the zero state, so we had like a 1, 2, and then quickly started taking off. So I just restarted the same trade, same risk box, same idea that it's got to get above... It's got to be above the hump of the dragon to become interesting. So that makes this the tactical space. That puts our stop here. And again, my job is to get the risk out. That immediately failed. In this case, would take about a half an hour loss. So we're down a half. This time I'm prepared on the collapsing dragon to take that short with the standard risk box here. So we're about minus 0.5 right now. It had two opportunities to fail further, and it really didn't. I was looking for this to fail, but it didn't. It rebounded. I was looking for this to fail, but it didn't. And then it came up and hit the PSAR, and this just felt like it was in a sideways chop. Felt like dead money. So we just scratched that one. It immediately rolled over. And as it came through the dragon, I get short again. Trading for the broker today. By this time, I now felt like, all right, well, maybe we're hooked into this thing now. So we're about +1R approximately here. Now this is where the test gets interesting. Is it going to come back to here and try to scratch out? Is it going to continue? So I think you got to have your stop somewhere in one of those two regions. You know, if that's your moment of entry, you've either got to lock in kind of the minimum wedge or a second wedge here at the edge of the dragon. I wouldn't be offended at the spine of the dragon or even the belly of the dragon. So if we went 1, 2, 3, 4, where would you put your stop knowing that you're minus 0.5 right now? I'm not going to give you the choice of putting it at 0 for a break even, because why would you? You should never leave this trade in that location with nothing to show for it. Okay, so there's a couple votes for 4. I think I was at 2 by this time myself. Four would have, now if you're playing this correctly, 4 would get you out here. Excuse me. 4 would get you out here, and then you should immediately get short in here, or not later than here. Okay. The 2 was lucky enough to keep me in, and then when that rolled over, I was able to wait for the collapsing dragon to get my second position in. But this is not a bad play here. To take your exit, now become positive for the day, because this one will pay for the loss. And then you could be more aggressive with your entry here instead of waiting as I did. I wanted to get more because I already had a position on. I wanted to get a little further. Yeah, this one. Yeah, that was sooner than the PSAR flip. As soon as the R10 came through the dragon, I was ready to go because this one had already had one big fail, a marginal recovery, and was rolling over right away. And there was weakness in the metals across the board. All right, so now on this one, we've got one entry, 2 entries in. This one is about break even. So to me, you probably have to have your if you've got the 2 positions in, you probably want to be like right about here or here, so that you, even if both exit, you're still in the money. Oops. This is a reasonable effort right in here. You could consider a third position. I didn't like it because I only had, less than an additional R in hand to get the third position on. But you have these descending peaks of the R10, and you just broke through. Here. So I would accept that one as a collapsing dragon. Now, if this had been your first entry, then I could see getting a second position on quickly. But by this time, it was running away to the downside. and the fourth position because why not? This was a 1, 2, 3 exit. So was feeling really good right here, but then it rebounded to here. The second bar closed here, and then as soon as the third bar started taking off higher, I locked that one in order to keep the fourth position in the money. So we make a tiny little wedge on that one. That's basically a scratch, but I didn't want that one to go negative. So after some initial just chopping around with 1 unit of risk, that gives us about 1, 2, 3. 3 on the first one, 1.5 on the second one. 1 on the third one, and scratch on the fourth one. So that's about 5.5. And the first one up here was minus 0.5. So we're netting about 5 right now. Okay. So this looked like failure to fail further. And after all of this, it did not fail further. And that felt like an emerging dragon. And so we put the standard risk box on it. And then up we go. Not much there. And and it was getting close to the last 15 minutes of the day, so there wasn't much. So maybe a third. Probably 0.3 on that one. Okay. So that's Alcoa for the day. And the instructive point on that one was what started off as a really just kind of choppy day ended up having a nice directional move and then got choppy again. So they all look the same leaving the station. All right, we'll just do a quick update of the swing portfolio. So, clean energy. Excuse me. So clean energy, we're still long from yesterday, and I had been able to move my stop to here. I'm going to raise my stop to here for Tuesday. That one's in the money. Devon, excuse me, Devon Energy, still holding yesterday's entry from here, which had the initial stop here. And it finished up slightly in the money, but I'm leaving I'm going to leave that there and give it some room to work on Tuesday. I have some hopes for this one because of what looks like a kind of a Kata 2 formation here. So I'm wouldn't be opposed to seeing that move, and it feels like it's got to get through, say, 62 and a quarter. That looks like the resistance level. So if this can get through, then I'll feel pretty good about that. Then 63.50 would be in charge. So there's really two legs, and then if it gets beyond 63.50, this thing will really go. So that's Devon Energy. Brazil, I have nothing on it yet. I was stalking. I think I'm going to be ready. If it breaks below here, I'll be ready to go there with a target to here. And if it breaks through there, have a second position short. I really want to see it get above 29 before I initiate a swing. But I will trade it in here in the tactical space on a 3-minute on a turbo, because this is Brazil and it's a little frog champion. So I'll start that one off in either direction with a 3-minute trade, and then try to grow it into a swing trade. So we had real estate. So real estate, I took a flyer on it here at the end of the day. I'm seeing this as a COTA 2. And yesterday we were long from here, and I cashed the swing here just to make bank on that little bit. And then it sold off and then had starting to make a strong rebound. And I just felt like this was a COTA 2 worth playing, because we're still well down into oversold. And if that holds the 10-day low, then in my view, the 5-day high and somewhere around in here are both within reach on a swing. And it was worth giving that a shot. So that's one I am holding over the long weekend into the new year. It just feels to me like real estate has been punished and feels like a natural candidate for some rebalancing money. So we'll see how that goes. That was the same logic I used on treasuries. We're long from here, and you know we've cashed some wins on this one, and so we're now long from here, and the stop remains here below the 10-day low, and it's right at that round number of 100. And so it's been trading strongly between like 110 and 100, and so this felt like a low-risk trade. And if we get weakness in the indexes, this has a good chance to go. And I'm already, slightly underwater on that one, so no hurry on that one. This is Mexico, EWW. So we had this short and cashed. We played the collapsing dragon here, added a second position here, and then this thing, the bottom just fell out of it over the, like in the last hour, and it's come down here to test the 10-day low. So I'm ready to engage a new position as soon as that breaks with a swing there. But in the meantime, I took my stop and brought it down to here to make sure that I've locked in the gains from those two positions. But I'm expecting something on Tuesday right there. This is U.S. Steel. So it tried yesterday along, and that was starting to work, but today it opened and started selling it. The same move that triggered the Alcoa intraday was making all of the metals very, very weak. And so when the R10 crossed the PSAR, I went ahead and took that exit, made a little bit of bank in here, and it finished fairly strongly right here. So I'm ready for it to break this way or to break that way. But the metals were so bad today that on Tuesday I'll be ready to play in either direction. If there's a strong move in metals, then I will be able to get a swing trade long from about here, and I will swing trade short from there, as well as the 3 minutes. So U.S. Steel is going to be a high priority for me for Tuesday. And the last one is Cliff. I have been intraday trading it only. I have not been swinging it because I've been swinging on U.S. Steel. This is one that also opened here and then sold off hard all day and then just kind of collapsed right into this. So I'll be ready to initiate a swing on this one, because if that fails, then this whole gap in here, that is not resistance at all. And this thing should drop like a rock if there's weakness on Tuesday. And if that happens, then there's every reason to believe it'll get down around 1450. So I'm holding out hopes on that one as a high priority for Tuesday. By the same token, this little failure to failure here, a failure to fail there, I'm ready to get long right here. Again with a tight risk box. And then if it can get through 1660, then 17 and a quarter is in range. Okay. So that's the update on the swings. Don't have much risk over the long weekend going into the new year. The two speculative ones that are not already kind of in the money was treasuries and real estate. And I'm looking for those to have a recovery as like a defensive plays if we see more weakness on Tuesday. All right, let's look at the traders today. All right, here was this was Satya, and he was stalking Alcoa. He had framed it yesterday to be short. He wanted to be short if it got below the yellow box, which was here, but was not able to pull the trigger in here because it was choppy in the morning, and that's the chop right there that I ended up netting minus 0.5. But when this CD broke here to a new low of the day, and all the metals were weakest, that's the one that gave me 5R. And that you don't get much more orderly than that. So you got to be able to detect those new lows of the day. A new low of the day after the first hour is significant, especially when all the metals were failing at the same time. That's a sector fail. Okay, so that's one that got away. However, he did come in nicely with Tesla for 1.7. He's got the OR3, an excellent exit to capture what was there. He waits for the PSAR break, gets a little taste, waits for it to come all the way through the dragon, PSAR break, gets paid. And now the dragon is rolled over, and now this is a kata 2, which he nails, and then a couple quick scratches, and then this kata 2 is really nice and picks that up. So 1.75, not a lot of big moves in there, but he's able to quickly capture what was available and did not hesitate to make bank. So I thought really nicely done. Now, this late afternoon move in Tesla, I think is, yeah. So my brother was available late in the afternoon, and somewhere out in here, there was a little upward trigger in Tesla, and my brother was on it with a 1, 2, 3, and he's trading the 10 minutes. So here's the PSAR flip, and he gets so there's a 1, higher low, so that's a 2. So I treat that as a 1, 2, 3, and he's able to, as it starts rolling back, picks up 0.6, almost as he goes into the close. No reason to hold that one overnight or over the long weekend. So nice job on 0.6. And then he's also playing that last that last little surge in Alcoa. He's playing the 5-minute on this one. So there's the PSAR flip. He gets an MMRB basically off the bottom. And then as it goes into the close, gets 1.5. So he gets a 0.6 and a 1.5 for 2.1 in the last 45 minutes of the day. No overnight risk. Good work. All right, let's find the weekend reports. So still solidly bear normal. Today's failure to fail gives a slight upward tilt to the 10-day and the 2-day index, but the longer term still showing weakness. We're only 4% below the 200-day moving average, so we've come a long way back up, but we're still a couple percent into the bear. The volatility was low this week, and so it's given us a cautious but realistic risk on. That's just the absence of volatility right there for the holidays. These are the new holdings for blended monthly rebalancing. Still seeing a lot of the internationals. There's EFA and Asia less Japan. The conservative Dow. Energy has had a recent run up. IEV is the European 350. And then in the ETF 32, that includes silver as the best representative of the precious metals. In ETF 2, we remain at 60% exposed, with 6 of the 10 indexes above their 4-month moving average. All right, a series of regression line fractals. These are daily charts. And we're seeing that the RL270 has flatlined. So the downward slope of the market has really flattened out. Now this now sets up an opportunity. Now when you see the RL90 has reversed up, and you're starting to see it pulling away from the 270. On a longer term basis, that's an improvement in psychology. And that comes from this whole upward move from here to here. That upward move was enough to flatten out the 270 and to turn the RL90 northward. As we've been talking about this week, that this little pullback was a cautionary note after that nice move up. Remember, you got 2 legs up, and this is 1 leg back. But if it could hold above the 270, and if we could get that turn, you actually have, you have a double bottom here, and you have a double bottom there. That sets up a COTA 2. There's still a possibility of a new money coming in January. And then the test of that will be, can it get above 405? So if it can come out of this, break through the PSAR and the Dragon, it'll come and test 405. And then if that can break, now you have the first evidence that we've actually got a higher low and a COTA 2, which would then mean that our next target level is up here at 430. So we've got about a $20 move there and about a $25 move there for the upside argument. Now, if this fails out of this critical state with declining volatility, if that fails, then the test is 355. So you have a tactical short inside here, but then if this breaks, then it's Katie bar the door and look out below. There will be a lot of political shenanigans, associated with the new Speaker of the House and all that stuff, but and Ukraine. But there's a tactical trade in either direction out of this compound critical state. I'm inclined to be optimistic just because it's New Year's money, and there were 10 days in which it had an opportunity to fail, but it did not. And I'm going to take my key from the RL90 is pointing up, and the 270 got flat, so that is actually a sign of some healing. Cautiously optimistic. This is a new one that I've added for the weekend report. So we're adopting a sniper mentality, but instead of the intraday, we're actually looking at a smoother, longer-term look using the 3-day bar for the fast move and a 9-day bar for the slow. And so we've got the 3-bar up here and the 9-bar down here. So the 9-bar is still showing a healthy market, and the 90 RL on the 9-day has slowed down a little bit because of the sell-off, but there's still a longer-term optimism on the 9-day bar. That's just like a 2 weeks. So we are still above the PSAR. The RL10 is sloping up. We have higher lows in the turning point, and it's already made one little run through the dragon. All this has to do now is get above that, 400 and get up to 410, and that'll be all right. And then on the 3-day, you can see that the Kata 2 is also shaping. This would turn out to be something like an inverse head and shoulders. I don't know what they call that, but there's a good reason to believe that this higher lows, that failure to fail, just might be enough for the RL10 to cruise up. And then again, it has to get through 405, and then it can have a run at 430. So both of these longer-term views give reasons for optimism, but I will say be very strict on protecting those price levels that we saw on the previous chart with the daily. Okay. Now, the standard snipers. These are all daily charts now. We're looking at the 150-day look back. There's our double bottom. Here's this double bottom. There's your leg 1, leg 2, one leg down, and then this was the consolidation this week. And again, all it's got to do is get through here to break out, or if it breaks below that 30-day low, look for 350, and if that fails, big time trouble. This is the 30-day look back daily bars. This was today. Here's our 5-day box, our 10-day box, our 30-day box. And again, we got about this is a compound critical state. Again, if this holds, then there's plenty of room for this to break to 403, and then 405 is kind of crucial. The first time that it'll break is when it gets above that descending PSAR, and that'll be a positive sign. But again, failure down here is instant short. Our 30-minute look. This is just a holiday drone session, and to me, the 1 and 2 chances it had to fail, it did not. This all held, so this is still tentatively until proven otherwise. This is Kata 2 with early entries available in here, and it has to get above this to really start going. So some good potential there. In the blended monthly rebalancings, the ETF 13s, about evenly split above and below their 4-month moving average. Notice the internationals are stronger. Asia less Japan and Euro-Asia blend, Australia, Japan, emerging markets. You got the mid caps, the Dow, and then below the zero line, you got small caps, large caps, tech just getting smoked. Thanks, Tesla. That's now people that do annual rebalancing that are looking to roll money from the winning positions into the losing positions. That would be an argument why you could see an early surge of buying in treasuries and tech and real estate. That's the real estate and treasuries that's the basis for my swing positions on those. ETF 22 portfolio adds the XL series like energy and industrials. That's where the strength in the diamonds are coming from. Materials and finance and healthcare, all pretty good. Energy and industrials are really making a strong play. This was the argument for keeping the swing in Devon, even though it was close to cashing out. ETF 32 adds a few more country indexes, and silver's been on a tear. There's oil exploration, had just the start of a good week after a terrible month. You can see the weakness in consumer discretionary, XLY, that's a combination of weakness from Tesla and Home Depot. And then clean energy, PBW, has just been a very satisfying short. And I'm just going to continue to pound that one. There's no free money left to speculate into green energy. They're just going to try to get through the next 2 years with a gridlock Congress. There's new money for green energy. But that'll be a topic for 2024, though. In the Dow 30, Boeing and Caterpillar just continue to dominate. Chevron with the bump in energy. And JP Morgan in finance is just looking better by comparison to Goldman Sachs, which is floundering and getting ready to fire their CEO. All the tech's getting smashed. Microsoft, Intel, Apple. That's Microsoft. Intel and Apple just have had horrible times. See a mixed bag here in the U.S. The NASDAQ getting smashed, but all of the value plays are pretty good. That's why you're seeing strength in the industrials, materials, and the Dow. And then the blendeds are a real mixed bag. So right now, value is winning in the U.S., the defensive plays. Europe's been actually pretty good. And quite a few strong countries in Asia. That's commodity strength in Australia. Really doing well. EWA. We've got 4 indexes of the Big 10 on cash positions. That's why we're at 40% cash. 6 of them are on buy signals. So that's 60%. And the globals are better than the SPY right now. And inside the U.S., it's mid caps, spiders, small caps, and tech getting smashed. This is the ETF2 model. Just scanning for targets. Green and white. I'll highlight that in red. So current strength is green. 10-week average of strength is white. That means it was good for the last 10 weeks, and this week it moved up into great. So that means new strength that can be exploited. The solid greens across the board in strength and consistency, those are have been great or continuing to be great. So you're seeing a lot of silver energy in Europe. But the winners in here, again, metals and mining materials, Europe, that's telling you something. Weakness starting to creep in biotech here. So that's white and green in the same way that Mexico, which we saw that very weak swing. White and green is the opposite strategy, where it was great and is now just good. So it's gone from consistently outperforming to only above average. So you want to be preserving profits, watch for resumption, and it can be traded shorter term too. Like we're exploiting the weakness that's creeping in. ETF liquidity, we're looking for the short-term tradables here. And we use the ATR percentage column to help us with that. So these are the top 30 ETFs based on average daily dollar volume of the last 30 trading days. We use ATR percentage then to take a look at their relative volatility to each other. The ones that are in the green are exceptionally volatile compared to this peer group. The red is exceptionally quiet compared to the peer group. White is above average, yellow is below average. So liquid and volatile is good trading material. That's Brazil and the gold miners. Here you have biotech, semiconductors, and oil exploration. Continue to be great for trading. The Qs and the Russell are not bad. They're above average, so they're not bad. As is energy. But again, if you're going to trade energy, in my view, you should come down and trade XOP because it has 50% more volatility. All right, shifting to the daily trade, I want to just notice that the little chart I briefed you on yesterday, I've moved it up in the order, so we'll look at the frog stats. This is the one that featured the trading value ratio. So I've moved that up out of the background up into the live target selection. Okay, zoom down to excuse me, dashboard 1. Again, we've seen all that. JP Morgan, ExxonMobil, Chevron, Visa, American Express, minimum pains. They are relative strength winners. The max pains are the ones that have fallen the most from their 10-day high. So these are ones that have been leading the way down. That's Tesla, Disney, Microsoft, Home Depot, and Mexico. Dow Tactical Summary. Lots of dojis today, small range day, not surprising. That means that the auto framers are going to be have large ratios, like 5 to 1 in IBM, 4 to 1 in Microsoft, 7.5 to 1 in Tesla, which might be interesting now. That failure to fail these last 3 days has been pretty good, and maybe turning the corner on that harsh sell-off. We'll see what that looks like. That's still the most important stock in the world. The story is not done on that one. We did see weakness in McDonald's, which I found surprising because staples have generally been outperforming. And so it's oversold on a channeling. So when with a 2.2 to 1 and a cash machine, that one looks to me like an opportunity. And let's see, Walgreens hovering on the edge of collapse. ETF Tactical, kind of the same story. Lots of dojis today on a small range day. Some really good auto framers. No signals on the NDXs, no other real patterns. You had oil and clean energy, so energy closed the year with a real strong move. This double weakness right here looks to me to be very exploitable. Starting with 3 minutes, and then we've got the swing already in Mexico working with 2 positions in and money in hand. So I'm going to really be managing that one closely on Tuesday. Auto framer, standard stats for framing. Lots of squeezes today, no surprises there. Just for the new guys. So the regression, I don't usually spend much time on this one, but regression line fractal framework. So it is comparing the daily RL10s and RL270s, and it's computing the reward as the distance between the RL10 and the RL270. So when those things are starting off together, there's the RL270 and there's the RL10. When they are so tightly together like that, the RL10 is the trader's price, and the RL270 is the long-term buy and holder's price. And so when those two demographics are in agreement, there's no room for a trade inside there. They both agree on the fair value. So the first thing that'll happen is that the traders are going to move it one way or the other. So let's say it doesn't matter which direction. So when that first move comes down and it runs, maybe, one leg, pause, and then 2 legs, and then starts to turn, a sharp move like that will hardly make the RL270 budge at all because of math. And now what that sets up is this difference of opinion between the long-term buy and holder's fair value and the trader's price. So when we're looking at this in terms of ATR percentage, or ATRs, we just take the current ATR, or ATR percentage, and we just count how many ATRs there are between the trader's price and the long-term buy and hold. In this case, there's 5. Well, if you had something like, if you saw that this hook has started to turn, and you let it move one box off the one ATR off the bottom, and then you decided to buy that, and you're risking 1 ATR, then you could conceivably have a 5 to 1 reward to risk ratio. And even if that thing only got a 50% retracement, you still got 2.5 to 1. And that's pretty good. And then if that continues on, you could have a great one. So we study that difference of opinion and then divide it by volatility adapted ATRs to come up with this reward to risk ratio. So the symbols in the green are the ones that are the most ATR below their RL270. So if my RL270 is here, and we have Tesla, so these are the modified Dows. Tesla is almost 8, 5, 6, 7, 8. Tesla is down here that far away from the long-term fair value. That's how harsh that sell-off has been. So if we are able to frame some kind of manageable risk box for swing trades there, then we have the possibility of a 7-to-1 return to the long-term fair value. That doesn't mean it's going to go straight up. Probably won't. Especially when the ATR is 10. That thing is $80 away from its long-term fair value, but that could set up a nice swing trade. What we'll often look for is the intermediate RL10, like the RL90, is often a nice first target and then a second target. So inside the Dow, or the large cap targets, because we got a few non-Dow players in there, Tesla is 7.5 to or 7.3 to 1, and the other ones are not as impressive. Apple 2.5 to 1. That should get your attention because that's a must own. Inside the ETFs, you have natural gas is 8.5 to 1, oil exploration 3.5, oil 3 to 1, Latin America 2 to 1. Now, on the other side of the equation, these in the red, these are overheated. These are the most ATRs above their own RL270. So this is the case where the RL270 is here, and their price has taken off. And so you see JP Morgan is 8.5 above his long-term fair value. Boeing, Nike, Procter and Cisco, these are all runaway winners in the battle, whereas these are the losers. Green is opportunity. To me, red is overheated, but they are relative strength leaders. You can play them for a continuation. I mean, money wants to go to winners. And then these are the symbols. This is energy, Germany, Italy, New Zealand, I think. I forget who that is. But this will give you some quick down and dirty risk-reward ratios on the basis of being normalized at 1 ATR for both risk, and then measuring the reward from the RL10 to the RL270. All right, shifting to sniper target generation. We got a couple, 3 Godzillas here in the S&P 500. They're all stealthy based on that quiet volatility. And then all of the Godzillas in the tactical symbol set are all stealthy Godzillas too. Ethereum, marijuana, Rivian, the VIX, and lithium. All extremely oversold, long-term and short-term, and abnormal volatility, and ready to go. I say extremely volatile. That could also be extremely quiet too. Okay. Our favorite sniper pattern. That alerted us to the nice upward rebound in Tesla this week too, by the way. Mostly quiet here. When you look at the one-day movers, nothing is even above 1.0 on the one-day move. And then all of the biggest one-day movers are all very quiet on the 5-day. and only two symbols in the entire S&P have a 5-day volatility greater than 1.0 sigma. And Southwest Air, that should come as no surprise. Some extreme volatility, or quietility, if I can coin a word, in the S&P. So expecting fireworks next week. Auto framer stats from TC2000 in the usual way. Oh, we haven't covered that one yet, so we'll just take a quick look at the scoring for today. The S&P was down a fraction. Yet diamonds and tech were slightly better. The Russell, treasuries, and emerging markets slightly worse. Tesla had another good day, up 1%. Oil at the top. I just want you to notice all of the metals, all three metals, at the very bottom of the day. See, when they're moving in tandem like that, that is a sector move. Like, so there's XLB. When the sector is worse than the S&P and the targets are worse than the sector, those are reliable shorts. So you got to find those movers. Okay. A little bit of hope springing here in the ETFs, but still a large component of winter in both the Dow large caps and the symbols. The only ones above the zero line, gold and oil in the summer and silver in the fall. Everything else is below the zero line in spring or just flat out in the winter. A little bit of joy in here in your pharmaceuticals. Pfizer, Procter, Merck. Excuse me. And then in the summer, Travelers, Nike, Boeing, Caterpillar, Verizon. That's Boeing and Caterpillar. That's your industrials and your defensive plays. Multi-time frame NDX. Chevron, ExxonMobil continued to rock. Bitcoin finally had a one-day spike. Intel in tech land, but it's been pretty scarce. But worth looking at. This little rebound in Tesla these last 3 days has given it a little bit of juice, but otherwise pretty gloomy. Gold, oil, energy. Kind of like silver still. And I like this in industrials and the Dow and healthcare. Now we're going to go take a look at healthcare. My brother asked me to take a quick look. Let me get one last thing. So the frog list, ranked by the trading value ratio, which is a multiplication of the average range percentage times the frog quality number, gives you this value, and then we rank it by that. So large is good. Means it has, on average, large days, and a high frog quality number means that it is very consistent. That makes Brazil really nice. And Boeing, too. Okay. So those are all very tradable and have a lot of short-term trading value. That's what the TV means. Is it's the default sort by the TV value. It rewards high, consistent relative volatility. And that's the formula. And this is the recipe for how to compute all that stuff. full disclosure. Again, we're just noticing the difference in post-COVID and pre-COVID volatility based on the slope of the RL30. We're coming into some value plays at a normal place to find some support. So if this can actually hold support going into the new year and the slope starts improving, that's going to feel like a COTA 2 upward move. There's your COTA 2 ready to go. We saw the slope of the RL90 was actually more comforting than the 30. But again, if this can hold, that's your COTA 2. The downside is easy to see. All right, I think that's everything we want to cover. Yep. I'm going to take a quick look at healthcare. Oops, wrong one. XLV. Like we always do, we'll pop out and look at a 3-month. Yeah, that feels pretty good. That's a daily charts looking at 3 months. So if it can get above 136 with about a $2 risk, that looks okay. That's the healthcare sector. If we look at UNH, United Health, the company, let's see if that's any better than the health sector that it's in. UNH. A little more volatile for sure, but it has a little COTA 2 action going, but it's very near its RL. It's a 150-day high. That's the 150-day high here. So if we pull back and look at the full sniper array, you know, that's in pretty good shape. And so a breakout from here, you could clearly see the 10-day high, the PSAR flip, the 30-day high, probably the all-time high. All of those are reasonable targets. So if you got a entry somewhere around in here with a risk box like that, yeah, you could see it go through all those tripwires and then go. And if we zoom out and look at the 9-day, yep, there's free and clear. All-time high. That's what you want. All right, that's everything we got for today. We'll get this published and posted, and we'll be ready to talk some swing trade charts tomorrow.